If you're looking behind me, you're seeing how overcast it is, but it's not really overcast. It's like riders on the storm from the smoke coming from the northern hemisphere.
Riders on the storm. Riders on the storm. Into this house we're born.
Hey guys, it's your favorite mortgage guy, Steve here. Those riders on that storm, boy, I'll tell you what, it is. I don't know what it's like in your neck of the woods, but there's a lot of smoke in the air. You can actually smell it. I got a couple notifications on my phone this morning that where I have a couple rental condos, they didn't open the pool because of the air quality. But wow, it is what it is. All coming from the northern hemisphere. All right, so listen, let me just start with, look at this. We got us a new Your Favorite Mortgage Guy logo. It's going to be hung up today. Let me start with some of your questions. Hey, Steve, I repair credit on my own? All right, David, because David's the one that asked me about this. And he and I talked in detail about, you can try to do it on your own. It's going to take you a very long time to navigate the credit bureaus, the laws, the rules behind the credit reports, understanding the algorithms. Here's what I would say. If you don't want to buy anytime soon, try it on your own. You will become frustrated just like everybody else. And you also run the risk of your score dropping even further. Now, I always put my folks in touch with a company called UQual. They do a great job. Is it free? Absolutely not. I don't know how much it is. It's 50, 60 bucks a month. But if you can get your score up or get some stuff removed from the credit report, and you can buy a house in 3 months, 4 months, versus you trying to do it on your own and it taking you a year or longer, I'd pay the 60 bucks a month or whatever the number is. And that's what most of my clients are doing. So can you repair credit on your own? The answer is yes, if you have the qualifications. All right, next one. Steve, I have a ton of equity and need to pay off some debt. What do I do? Okay, couple of things. That was a real life scenario this week where a person lost their job, had to live off of credit cards, got a job back, but $60,000 in credit card debt. Payments on that was about $1,390. And so what we ended up doing was we just did a full-on refinance and did a cash out. Nobody cares anymore about the 2%, the 3%, the 4% interest rates because there's so much equity out there. People are living off their credit, or they're going out and buying these cars with an $1,100 car payment. And then they realize after they've driven it for the first month, oh boy, I can't continue to pay $1,100 a month for 9 years. So we do a cash out refinance, you pay off the car. So many things you can do with that. You can get home equity lines of credit. You can do renovations on your house. If you want to add on to the house, you can do that as well. You can do updates. There's so many things you can do. And listen, do not let the rates scare you. Rates are going to be what they're going to be. There's nothing you can do about it. So let me talk about today's segments. All right. So financial markets, now listen, they continue to show signs of weakness. Many of the investors that we see out there are watching the Strait of Hormuz closely. Now, once that shipping through that region is fully reopened and operating kind of normal with no bombs flying or anything like that, there's hope that some of the uncertainty surrounding energy prices and global trade will begin to ease. Now, exactly how much impact, nobody knows. It just remains to be seen, but it's certainly something that I can tell you the markets are watching. And if you watch the stock market today, Friday, July 17th, and by the way, it is my birthday today. If you're watching the stock market, it's tanking as well because there's so much uncertainty. So unfortunately, the housing market, listen, it didn't receive good news today either. Pending home sales fell 5.4%, reversing the increase we had in May. Since pending home sales measure contracts that have been signed, this is one of the earliest indicators of buyer demand slowing down. So remember me telling you about, hey, hurry up and get out there because prices are going up. Well, now you might have some relief. Now, not interest rate relief, but you might have sales price relief. Now, the recent rise in mortgage rates, that's clearly beginning to slow purchase activity. We know that. But looking ahead, I will tell you this, the economic calendar, it's looking relatively quiet over the next week. There's a few major reports scheduled. The bond market will likely take its direction from the Treasury auctions and the Federal Reserve commentary. Now, the Federal Reserve Chair, Kevin Warsh, met this week with some folks in Congress or the Senate, I don't remember which one. And of course, he talked about inflation, They don't want to drop rates right away because, you know, the last three times they dropped rates, housing prices went up. And that's where the affordability factor comes in. So, of course, that technical trading and any geopolitical developments, I'm going to try to keep you apprised of, but just hang in there. From a technical standpoint, okay, this question came up. What indice do you use? Well, we use the 10-year treasury. And now that 10-year treasury, you can look it up on your phone, just the US 10-year treasury. You know, it tested resistance and failed to move higher. As long as the yield remains within the current trading area of like 4.49 to 4.55, mortgage rates long term could the trends pointed in a neutral direction. Now, I also wanted to answer the question I received yesterday. Why do I spend so much time talking about the 10-year treasury instead of mortgage-backed securities? All right, guys, the reason is simple. Mortgage-backed securities are influenced by moving parts of the economy. So if something's slower, jobless figures, consumer price indexes, investor demand, prepayment risk, pricing spreads, you know, this person's quoting this rate, this one's quoting this rate. There's only 100 pennies in a dollar, and that's what I keep telling you. This makes the chart analysis much less reliable. The 10-year treasury provides a cleaner technical picture because you see it, and often it gives us the best guidance, which is when making lock or float decisions to save you money. That's what I use. Now, I need to tell you, you got to remember the story. Excuse me, you got to read the story. You can't just read the headline because the thing is this: if you're reading a headline, you're not getting all the information, and that's not enough to quell your thirst for knowledge. So I'm your favorite mortgage guy. I'm here to help you any way I can. I know this was a weird one today. A lot of it has to do with the fact that the technical data is just not reliable right now. But what I do know, want you to know, is look around my screen here. Make sure you tell your friends, your family, your coworkers, anybody that's thinking about a mortgage, buy, sell, refinance, renegade. You need a home equity line of credit. You want to build a house on some land. I got construction loans. Whatever you need, reach out to me, your favorite mortgage guy. Have a great weekend.
This house we're born, into this world we're thrown, like a dog without a bone, and actor out alone, riders on the storm.